Over the years, as Edelweiss has grown, we have worked with a lot of entrepreneurs. In fact, our start was working with startup entrepreneurs, helping them raise capital, grow their businesses. We have over the years been investing, in startups also. We currently don't have a plan to raise a formal fund, but as you know, one of the areas we are very positive about is the financial technologies, fintech space as they call it, because the entire technology landscape in financial service undergoing a change. We see that there are a lot of e-commerce companies coming up and all, but we are not seeing as many companies focusing on the in the fintech space, and we think they will explode a lot. And since we ourselves as a large financial services company use a lot of these services and the products of these companies, we have been investing in some of the fintech companies from our own balance sheet as a strategic investor, and we see a lot of opportunities in that. So our idea is to invest in areas that are related to us, because then we can add value into those companies, being a financial services player.
Right. And sir, markets is all that's hogging attention. So what do you make of the correction that we are presently seeing in the equity market?
I think it's in a way a slightly welcome correction, because there are a lot of investors who will get a chance to invest. This is largely globally induced because there is a global volatility which has got filtered into India, and I always believe that in the short term, India is very correlated to global events. So I think the global uncertainty, volatility is very high. We think whole of September might be very challenging from that point of view. But if you're a long-term investor, this could be a good opportunity, because in the medium to long term, this global slowdown, global uncertainty will be very beneficial for India. India will actually benefit out of this, because if the global economy is slowing down, oil prices will be low. If all the countries are growing slower, then India's 7% growth also looks very good. And India's current macroeconomic parameters, whether it's inflation is falling, interest rates are coming down, on the current account we are fairly positive, on the fiscal deficit India is very strong, we're still clocking along with 7% GDP growth. So these are very good macroeconomic parameters for India. So they will only become stronger. So this will, in the medium term, after 3-6 months, will be a huge positive for India.
Right. But given the currency situation that we are seeing, how comparable is this to the Asian currency crisis in your view?
I think our view at Edelweiss has always been that Indian currency, Indian rupee, will track the other Asian currencies. In a way it should be, because if they are all falling, then if Indian currency remains stronger, in fact the currency has become stronger vis-a-vis a lot of other currencies in the last 1 year. So we also need to maintain our competitiveness. So some depreciation of the rupee, just staying in sync with how the other currencies are falling, is I think part and parcel of that. We don't see a free fall in rupee, because I think our current account surplus, we're going to be a current account surplus this year. So on the balance of payment side, we are very strong, and we have a lot of forex reserves. The foreign exchange reserves, RBI has done a very good job building a huge war chest of foreign exchange reserves. So given this, India will not be in free fall, but a gradual depreciation of currency when everybody else is also depreciating is not a bad thing.
Right. And do you think Sensex targets will be trimmed going forward? Because the global crisis will have an impact on India going forward.
I think it will vary whether people are looking at end of the year, December or March, or as I said, I think the next couple of months might be challenging because of the global uncertainty. But if you take 5-6 months to next 3-year view, India will be a very big beneficiary of this.
And in terms of the improvement in earnings, what sort of signal are you getting from corporates with this?
I think as you saw, the first quarter was not great for earnings. I don't think second quarter will also be very, very great, because we're still not seeing a top line pickup. Sales are not picking up. There is truly a slowdown in the Indian economy that is happening. But we are hoping that corporate earnings from third quarter, fourth quarter onwards will start inching up. And for the FY17 year, a lot of people will be happy if we get corporate earnings of about 14-15%.
Okay. So also, Prime Minister Modi is scheduled to meet economists as well as industry soon. So what do you really think the government can do to insulate India? Because we're seeing a lot of volatility globally.
I think 3-4 things, and government has been doing quite a bit. They've improved governance efficiency, they've cleaned up the system, a lot of the stall projects have come on stream. We are seeing approvals are coming a lot faster, so they've injected a lot of efficiency in the system.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.